what made you start to say, okay, we're not only Bitcoin only, but we're going, the whole crypto space is interesting? Because in the beginning, you were the Bitcoin guy.
Yeah.
There's a whole bunch of you were all Bitcoin, 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 and then it changed. What changed?
It's a really interesting question. I think part of it was, like I have outside shareholders, I have employees, where it definitely felt like it was the prudent thing to do to as this asset class was growing, as there were more applications being built.
Hey guys, welcome to Everyday Finance. Raoul Pal and other analysts who support him believe that the recent crash in the cryptocurrency market is not as catastrophic as the headlines may suggest, particularly with regard to Bitcoin. Even though Bitcoin is down about 10% in 2025, it is demonstrating remarkable resilience in comparison to previous downturns, which could result in losses of more than 50%. Bitcoin experienced a drop to $75,000 due to global uncertainty and market pressure. However, it quickly recovered and is now trading at approximately $85,000. This stability indicates that investors have a higher level of confidence than they did in previous cycles. Despite the fact that markets have been under pressure due to macroeconomic factors such as geopolitical tensions, trade disruptions, and a weakening of the United States dollar, Bitcoin's reaction demonstrates that it is maturing and becoming less volatile. This shift, in conjunction with the fact that it is still relatively close to its all-time high, suggests that the correction that Bitcoin is experiencing may be a temporary one, rather than a warning sign of deeper weakness. Now let's take a listen to Powell.
DCG then grows to be an enormous beast because it was the access point for almost everybody, right?
Yeah, I think we're uniquely positioned to serve as kind of a bridge between this asset class and the kind of the traditional investing market. Because at the time, I mean, it was, I remember when you put out, your $1 million Bitcoin price prediction, people were like, this guy's gone crazy. There were very, very few. I mean, you were really one of the first ones.
That was 2013.
Yeah. And so there were very few people that were legitimate Wall Street finance people.
I don't know if I'm legitimate, but I'll take it.
Well, you were right. And so now you're legitimate. And so, because I had developed a bit of, I guess, a bit of some credibility, kind of doing what I do at Second Market, when I started running around doing kind of the Bitcoin evangelism, people listened. And so with DCG, really for the first 5 years, it was really all about, okay, how do we invest in the companies that are making Bitcoin accessible? How do we invest in the businesses that are going to take Bitcoin to the next level? And so over the next 5 years, we launched Foundry, which is today the largest Bitcoin mining pool in the world. I mean, before we launched Foundry, there was essentially no Bitcoin mining in the US. And one day, you may remember this era where there was a lot of fear that like 80% of the hash rate was in China. And one of the biggest criticisms about Bitcoin was that it was controlled by China. And so we kind of said, all right, well, screw that. Like, let's try to bring Bitcoin mining to the US. And the way we did it was we started actually financing, providing capital to miners in the US. And in order to get them up and running, we bought a ton of equipment from the manufacturers of the equipment, and then basically provided financing to these miners to get off the ground. And as part of that, we built this pool. And then so today, a third of all Bitcoin transactions go through this pool that we created. And
Wow.
It's Foundry USA. So we launched Foundry. We bought CoinDesk in the depths of it was one of the crypto bear markets. I think would have been around 2007, 2018. We bought CoinDesk for $300,000 and then turned that into a business that we sold a year or so ago.
So a friend of mine here, Brendan.
Yes, for a good outcome. We bought a company called Luno, which is, think of it kind of Coinbase for the emerging markets, the dominant player in Nigeria and South Africa. And along the way, we invested in, we're probably up to 300 companies we've invested in. We've invested in probably 50 different kind of crypto assets. And what's unique about our model is we're a private company. We're not a fund. And by being a private company and not being a fund, I have the luxury of permanent capital and time. So we get to make investing decisions, capital allocation decisions. Like I have the fun job of trying to predict the world in 5 or 10 years and place these bets. And I'll be, wrong more than I'm right. But when you're right, there's massive, massive payoffs.
What made you start to say, okay, we're not only Bitcoin only, but we're going, the whole crypto space is interesting? Because in the beginning, you were the Bitcoin guy.
Yeah.
There's a whole bunch of you were all Bitcoin, 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 and then it changed. What changed?
It's a really interesting question. I think part of it was, like I have outside shareholders, I have employees, where it definitely felt like it was the prudent thing to do to as this asset class was growing, as there were more applications being built, to be open to the possibility that other cryptocurrencies actually have real utility. Now, I think most people are going to come full circle and realize that there's probably not much beyond Bitcoin, and that's where my head is at. But part of it was, okay, like I'm not going to be a Bitcoin maximalist just to be a maximalist. And the other is, along the way, there were a bunch of really interesting teams that emerged that I got excited about, and I love betting on the underdog. I love betting on the big ideas. I love betting on the visionaries. And
it's really an extension of what you were doing as a VC. You just start saying, okay, here's application for the blockchain technology in different ways.
Yeah, we talk about something called the DCG playbook. And so we identify protocols, tokens that we think have the opportunity to kind of change the world kind of stuff. And we bring to those ecosystems our ability we invest, we build, we buy, we educate, we create access. And look, that doesn't happen that often. I mean, I'm doing that, once every 5 years or so. But when we do it, we've been very successful at doing it.
A growing number of analysts are of the opinion that Bitcoin is now acting in a manner similar to that of digital gold, which may be preparing for a significant rally. Due to the fact that gold has already reached new all-time highs in 2025, Bitcoin is considered to be slightly behind, but is getting ready for a move that is comparable to gold's. Trading voices such as Cryptoica have predicted that Bitcoin could potentially surge to $155,000, drawing direct parallels between the consolidation phase of Bitcoin and the patterns that have occurred historically in gold. This viewpoint is supported by data from Glassnode's on-chain, which demonstrates how Bitcoin has maintained its strength despite the pressures of the economy and maintained a significant amount of market interest. It is possible that Bitcoin is in a position to absorb a wave of demand as investors seek out hard assets. This is because the global money printing has reached record highs, and confidence in fiat currencies is eroding. If this pattern continues to hold, the subsequent phase may involve a significant price breakout, which would be similar to the bullish trajectory of gold. Watch more clips.
And as you launch new trusts, when you've launched new trusts in the past, who are the buyers of those trusts? Why does somebody buy a specific trust versus buying the underlying crypto asset? Or, what is that mechanism?
So Grayscale, it was one of the 5 businesses that we own, has really done a good job being first mover and being incredibly, I think, creative around the wrappers that it puts in place to make accessible this asset class, which is, even today for many, many investors is super hard to access. So Grayscale, I think, has over 30 different products right now. Some are, the Bitcoin Trust, Bitcoin Mini. They have the large cap trust, symbol GDLC. Then they have kind of single token trusts. And the Grayscale model is, okay, let's open up these tokens. Let's open up this asset class to a broader universe of investors and kind of take it from a private trust into becoming a public publicly traded trust. And these are access products. And so think about Grayscale. I like to think about Grayscale as it's really like the next Vanguard. It's in the way that Vanguard pioneered index investing. Grayscale's pioneering crypto investing. The way that PIMCO pioneered bond investing, Grayscale's pioneering kind of crypto investing.
And how much assets does Grayscale have now?
I think at year end it was about 30 billion.
Wow. Did you ever think that when you started building the first product, did you think you'd have 30 billion in product?
When I raised, so we did one equity round for DCG in 2014. I remember there was a slide, and we talked about our model and the upside. And I think Bitcoin at the time was maybe $1,000 or something. And I remember there was we had our base case, we had our upside case, and we had our moon case. And I think our moon case, was maybe $30,000 Bitcoin, and our upside case was like 10,000. But look, I think it's clear that this asset class is here to stay. It's clear that Bitcoin has an important role in the portfolio. But look, I'm excited to see the interest from the Larry Finks of the world. I'm excited to see the interest from the governments around the world.
It's been a long fight, my friend. It's been a long fight.
Yeah, and it kind of feels like, all right, like we did it. And there's a bit of it's kind of like you discover a band in the club, and like you follow them, and like one day they get they get some major exposure, and they're playing stadiums, and they're the Super Bowl halftime show, and it's like, okay, like great, like Bitcoin is my first love. It is my first baby before my actual children. And now I'm excited about some new stuff.
Before we go on to new stuff, the other thing I want to ask you about, because I don't really understand it, is mining. What kind of business is that? How difficult is that business to manage? Because it feels like the miners as publicly traded stocks, they kind of struggle. At some points they do well. How does that whole industry work?
Yeah. Do we have a few hours? So we have two.
Feels like it's a really, really bad way to own Bitcoin.
Yeah. Okay. So we have two businesses that we own. So we own Foundry, which I talked about, which I'll come back to in a second. Then we own a company called Fortitude. So Fortitude is we're actually mining ourselves. And what's unique about Fortitude is we've developed or created the first ever venture miner, where we are mining a lot of different tokens, all proof of work tokens, and looking at mining as more of like a venture play. So we're deciding which tokens to mine, which to hold. And it's a great business. And there's not a lot of miners doing it. So that's on the Fortitude side. And that business, look, it's all about being smart about what you mine. It's all about access to facilities. It's cheap energy. It's access to the equipment. On the Foundry side, so Foundry's business is very, very simple and straightforward. It runs the pool. So it has built the infrastructure that enables these US miners to mine Bitcoin and secure the network, and it has site operations. And so it has a team of people that essentially stand up and run the facilities for many of the miners around the country. So think of it as, where there's a part technology, part, think of it like Schlumberger, that type of business. So we are not taking at Foundry. We're not taking any capital risk. So we're not buying machines at Foundry. We're not speculating the price of Bitcoin. We're enabling the US Bitcoin industry to thrive. So for us, it's obviously it's a complicated, challenging business because it's Bitcoin, because your revenue is doing this, but we don't have to make large capital investment decisions and try to assess future hash rate or payback periods. The miners do that, but the miners they have all the upside. Like Foundry doesn't have that type of upside.
So let's talk a bit about the ugly year of 2022. So you built this huge business.
Could we forget about 22?
I'd like to. We all would, because it was fucking ugly and horrible. And I know it was really tough for you. But, I know a lot of it you're still in litigation with and stuff, so we can't talk about a lot. But I just want to hear kind of your foretelling of it. What happened in 2022? Not just to you, but to the space. Because, you've been in the space for a long time. There's always leverage that blows up. There's always problems. But it was spectacularly big this time around.
Okay, so what happened was in COVID, money printer went burr, prices skyrocket in 21. And I think it was one of those situations where, I think with most asset classes, a bubble formed. Um, Excess leverage was essentially put in place all around the asset class, and there was a lot of known and unknown connectivity among the various lenders, borrowers.
Yeah,
And
and there
so,
was one very big borrower in the middle of it all that people didn't know that they were
yes,
half the borrowing.
During the time that Bitcoin is working to consolidate, Solana is stealing the show. The price of Solana, SOL, increased by 40% in just 10 days during the month of April, going from $95 to approximately $133 and gaining 8% in a single day. This momentum is being fueled by the launch of the very first spot Salana Exchange Traded Fund ETF in Canada, which provides traditional investors with easier and more regulated access to the asset. Big players in the financial industry, such as 3IQ and Purpose, are supporting this move, and even smaller businesses, such as GOVA, are following the playbook that MicroStrategy has laid out for them by increasing their stakes in SOL and participating in staking and validator roles. Over $120 million worth of assets have been bridged from other blockchains, and the total value locked, TVL, has increased by 12% in just 1 week, reaching $7.08 billion. The network itself is experiencing a tremendous amount of activity. According to the charts, Solana has broken out of a bullish pattern, and technical analysts now see the possibility of a run towards $200 of the cryptocurrency. Institutional capital, technical strength, and the growing utility of networks are all converging at the same time, and this is not just hype being promoted. Thanks for watching.